Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is October the 4th, 2024. And you might remember a few weeks ago, maybe two, could have been three, I shared a video and a story about a friend of mine who was hedging his future diesel fuel purchases. So what he had done is he had put on a hedge on his diesel fuel. So what he'd gone a long position, and with anticipation that if the price rose, then he would pay more in the cash market, but he'd also be off, those costs would be offset with gains in the futures market, on gains on his paper position. The challenge was, and perhaps the problem was, there was no stop in place, no plan to get out if he was wrong, and the trend was down. So there's a few challenges there for that trade to be executed properly. So I think it was on to September the 6th, he contacted me and said, "Hey, Trent, I don't know what to do. What should I be doing? Should I just rip the Band-Aid off, take the losses, live to fight another day?" And I took a look at the chart here, and this is the New York Harbor ultra-low sulfur diesel fuel weekly chart. And I drew a trend line. And again, trend line should be drawn with a crayon, not a pencil, but I drew it with a pencil. So I suggested that we give this thing one more week. We're testing that bottom trend line. Some other indicators that I look at suggested we're going to have a bottom in the price either this week or next. And just give us a little bit more time to play out before we rip the Band-Aid off. I suspected that we could get a reversal in the price, trying to get a pivot in the price. That actually happened. That was nice to see. So we've actually had, since that time period, a 3-week a rise in the price. So again, we were anticipating 1 to 4 week. Now we're at week 3. So that was good. So what I did is his break even was around that 232 level. So what I suggested is, if it was me making this trade, perhaps put a sell order in around 227, 232, somewhere in that range, get back to close to breaking even, maybe break even. Just reassess and live to fight another day. So I'm not sure what he did, but that's how I look at the market. I've been in this position too many times, and sometimes that I just want to get back to break even before and then reassess. From my own experiences, often you get back to break even and you get a little greedy, and the primary trend continues against you, and you end up having those losses anyways. And it's not a good feeling. Let's look at the daily chart. So the daily chart's interesting enough too. So we got a nice little rally. What I did is I drew this anchored volume weighted average price from the July 2nd high, and voila, that's where sellers are stepping in. We're finding some resistance on today's candle, and I anticipate that to continue a little bit. The 50-day moving average is below the price right now, so that's interesting. So I think at this point now, you just want to reassess the diesel fuel purchases or reassess the chart and look for more information and see how we can play this. For me to think diesel fuel is going to go higher, I really need it above today's levels. I need it above 233. And then I started becoming bullish diesel fuel purchases. But right now, I'm probably neutral, but leaning towards bearish in the price. But if we get above 233, then I start to reassess, and maybe that's a time when a hedge might be more applicable. The 200-day moving average is overhead here, so at 250, of course, there's 18 cents there to be made, or above here potentially if the price rises. But again, we really want to look at the psychology of the market, and if all the buyers from July 2nd are underwater, they're more likely to sell than they are to add to their long position. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.